It feels as though you probably are going to echo what Steve Pagliuca, what Reid Hoffman, what Ed's just been saying, that we're just at the beginning with this 4 trillion number.
I mean, definitely. The numbers are not surprising right now. And when you're looking at on the valuation basis, NVIDIA is not necessarily much more expensive today than it was a year ago. The PE ratio is totally acceptable. It's around 52. But with the upcoming earnings, we think that's going to be pulled back to low 40s. And 4 trillion number, it incorporates not only what NVIDIA achieved so far, obviously, yes, but also what it will be achieving. And they're proactively searching clients and expanding their client book to other continents and to other sectors like robotics is very interesting. We actually think that robotics is going to be the next big milestone because giving AI hands, feet, and a body is just going to be amazing. We are just at the beginning of this AI revolution. It's just so exciting.
And other companies benefit too. We think of TSMC, which is the chip maker of choice for NVIDIA. Their numbers, once again, according to the Bloomberg Mathematics, is about 39% increase in revenue in the previous quarter just gone, Ipek. How much are we likely to see other chip makers really fueled higher? AMD doing well today on the back of it.
Well, we have been quite positive for AMD. It hasn't done perfectly well over the past few months. Now it is back to the bullish consolidation zone. Now we think that companies like AMD, alternative cheaper versions, will be quite interesting when the AI adoption is going to go wider because some companies will be looking for these cheaper alternatives. This being said, NVIDIA is not only offering chips, they're offering ecosystem. And this is where NVIDIA is still beating its competition. This is why probably we see the growth in AMD and the investor interest in AMD remain quite low. But we think that AMD's time will come.
Both AMD and NVIDIA still want to have a presence in China as an end market. And actually, there's reporting that Jensen Huang is going out to China very soon because he wants to be making yet another specific chip that is allowed to be exported. How much is that a headwind for you, or indeed a long-term tailwind, whether or not they will have access to this market?
Well, China is a politically and a geopolitically sensitive market. So when NVIDIA goes into that market, we know that the risk on that specific segment is higher. But the company's efforts in expanding beyond China and the US markets like Europe, for example, and Middle East, which do have deep pockets and very big potential, actually dilutes the risk of, well, not doing business in China. We think that China is still worth trying. As Jensen Huang says, it's not necessarily a good idea to completely ban chips from China because it will only push them to do better. So I think that China is still an interesting market, but if the risk could be diluted like NVIDIA is doing today, then it's going to be only a tailwind rather than a headwind.
Just putting it in the context, and your note does this so well for us, Ipek, I love reading them, that basically NVIDIA is up 1,000% since ChatGPT came to all of us. So AI, generative AI, was put in yours and my hands.
The number of possible uses for artificial intelligence, AI, which is universally acknowledged as a game-changing technology, is increasing daily. Although it may appear that these sophisticated algorithms are widely used, the adoption of AI is still in its infancy. According to some experts, it is now less than 1%. This implies that there is still much room for growth and that the spread of AI is far from over. NVIDIA has arguably benefited the most from the introduction of AI. The company's processors are the best option for AI processing, and it created the graphics processing units, GPUs, that enable this revolutionary technology. Given that the stock has increased 950% over the last 3 years and reached a new all-time high at noon on Friday, the impact has been evident. Let's stand back and examine the potential, what NVIDIA offers, and the reasons the stock is still a good investment. NVIDIA's graphics cards have long been praised by gamers as the best of their kind, and the 1999 release of the GPU completely changed the gaming market. Parallel processing, or the capacity to carry out numerous intricate mathematical computations at once by distributing processing resources among the chip's numerous cores, was what made its chips unique. As a result, video games now have realistic visuals defying conventional knowledge. In 2009, renowned AI researcher and Stanford University adjunct professor Andrew Ng presented a groundbreaking study outlining the possible use of GPUs in machine learning, an early subfield of AI. As word traveled swiftly, these chips, which now account for 95% of the GPU market for machine learning, became the industry standard for computing these innovative yet early algorithms. NVIDIA was well positioned for future developments in AI thanks to its early market dominance. Data scientists and researchers naturally turned to GPUs to support the most recent developments in AI when generative AI gained popularity in early 2023. The bulk of generative AI takes place in cloud computing and data centers due to the processing demands, where NVIDIA leads the market with an estimated 92% of the data center GPU market per IoT Analytics. Over the next 10 years, it is anticipated that the demand for data centers will continue its spectacular growth. Cube Research projects that data center spending will soar from $392 billion in 2025 to about $1.7 trillion by 2035. The business is well positioned for an AI-centric future because of the continuous expansion of data centers and NVIDIA's hegemonic status as the de facto standard for AI processing. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. In recent months, NVIDIA's sluggish growth rate has drawn all attention. NVIDIA's current growth still outpaces that of its competitors, but it was unrealistic to expect the business to sustain its triple-digit year-over-year run indefinitely. The business made a record $44.1 billion in its first quarter of fiscal 2026, a 69% year-over-year increase. Adjusted profits per share, EPS, of $0.81 rose 33%, despite a $4.5 billion charge for the H20 chips produced for the Chinese market that were subject to export restrictions imposed by the Trump administration. The EPS would have increased by 57% if not for the one-time expense. NVIDIA anticipates sustained strong growth. The corporation is projecting record revenue of $45 billion for the second quarter of fiscal 2026, which would mark a 50% gain. Therefore, even though NVIDIA's triple-digit annual growth may be of the past, the company's growth is still impressive. Investors could worry if NVIDIA has become too costly given that it has reached a new all-time high, but the answer may surprise them. As of this video, NVIDIA's stock is trading for about 38 times its projected earnings. That is undoubtedly a price, but think about this. NVIDIA's revenue has increased by over 1,000%, and its earnings per share, EPS, by 2,140% in the last 5 years. This has contributed to 1,470% increases in the stock price, which serves to demonstrate the need for a premium. Additionally, the price-earnings-to-growth ratio, PEG, indicates that NVIDIA has a multiple of 0.66, which explains the company's impressive performance. Any figure below 1 indicates a cheap stock. Although there has long been a widespread belief that NVIDIA's rivalry is intensifying, no serious competitor to its market-leading CPU has surfaced as of yet. The majority of experts believe that the adoption of AI will continue for at least the next 10 years, despite the hype surrounding generative AI, which is still in its infancy. Although the exact size of the AI business is unknown, even more cautious projections are instructive. By 2033, the generative AI market is expected to grow to a value of $4.8 trillion, according to the United Nations Conference on Trade and Development. It's evident that NVIDIA still has a long way to go in terms of growth given its dominant market position, widespread adoption, appealing pricing, and the sheer size of the opportunity. NVIDIA stock is still a good investment because of this. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
How much are your clients balking at the fact that we have seen this run up? I know you talk about the PEs actually being relatively appetizing. We are at a technically overbought level, though, if you're looking at the RSI.
Well, yes, in the short run, we are at overbought market conditions, meaning that NVIDIA stocks may have been bought too quickly in a too short period of time. But what investors look with NVIDIA is not necessarily the short-term dynamics and short-term indicators. They actually do have this very long-term perspective on what NVIDIA will be involved in the next decade. NVIDIA is a company that is going to be at the heart of AI and robotics for the next decade. So if the price is overbought today, it is not necessarily necessarily a major, significant downside correction potential for the long term. Investors are really looking at what NVIDIA will mean in 2, 3, 5, 10 years from now. And when you look at that perspective, the company still has so much to offer.
We've talked about Asian companies, TSMC, for example. You're sat in Switzerland. We've got a European tech show recently launched as well. How much are you thinking about the European opportunity here? Are there any names other than ASML that have been coming to light when it comes to AI?
Well, we do have a couple of names. We obviously don't have names like you do in the US, like Facebook, Meta, Amazon. So what's going to be interesting in Europe in terms of AI, I think, is going to be more specific models, sector-specific models, business-specific models, so that they can find the data that they need in order to train these models. We do not have these huge AI labs, these huge platforms that could help building these models. So it's going to be a very different play in Europe, and European companies will be going case by case, and they will be building smaller, more specific models in order to benefit from AI benefits. So it's going to be very different landscape of AI when you're looking at Europe rather than what we see in the US today, the worldwide big companies reaching out to everyone. I think it's going to be much more B2B business based.